Tyler, let's talk about some high dividend. Tyler, let's talk about some high yield dividend stocks we think are worth buying right now.
I'm always on the lookout for some dividends, even though, I don't know, I'm kinda young. Most people wouldn't think that's a thing, but there's young people that like dividends too, folks.
That's right. That's right. Because those young people know eventually they're going to get old. And if you buy really good quality companies, especially if you can capture a little bit higher yield and they're able to grow those dividends over time, you're probably going to do really darn well as an investor. I'm Jason Hall. This is Investing Unscripted. This video is sponsored by The Motley Fool. If you're looking for even more great stock ideas, go to our link. It's fool.com/unscripted. If you go to fool.com/unscripted, you can get The Motley Fool's 10 best stocks to buy right now. Okay, Tyler, how about you kick it off? Since you're a young guy talking about old stuff, let's go with the company that the ticker is Dino, Dino.
Yeah, best ticker, like a top 5 ticker, I think, actually on the market today. So HF Sinclair, ticker Dino, is a refiner and retailer of gasoline refined products. If for those who live on the West Coast or New Jersey, that's like the only 2 places where Sinclair exists, you will see those kind of iconic retail gas stations with the big green dinosaur on them. That's probably half of the business. And the other half is a refining operation that mostly the mid-continent area of the refining industry. One of the reasons that I like this business, aside from it having a 5.75% dividend yield today, is this is a business that for decades, it's not a high growth business, but it's a business with very good management that has a good eye for return on capital. It's been doing a little bit of consolidation lately. The merger of HF, which used to be Holly Frontier, and Sinclair, which was a private company, those 2 combining it's been their ML for a long time. Holly Frontier was a minor acquirer of things like specialty lubricant manufacturers and a bunch of other, like, value chain enhancing aspects of refining because there's not, like, huge growth in actual refined product use in the United States when it comes to, like, gasoline, diesel. It's kind of on the decline. So, great capital allocation and an interesting, I'll call it, like, well-tailored refining operation. This parts of the country, like refineries in Wyoming and Kansas and places like that, we have a lot of, like, pockets of the US that has weird types of oil. Like, not all oil is the same. Some of it's, like, heavier, denser, thinner. Some have lots of sulfur, some don't. It's all categorized. But HF, the Holly Frontier refining aspect of it was spectacularly good at kind of, like, taking a lot of the junk, not well used crude oils and being able like, building out the capacity to refine it so it could buy these kind of oils that trade or crude oils that tend to trade at very, like, significant discounts to the broader market because it's an undesirable type of crude. And they're like, well, we can make gasoline out of it, and have been able to have large, what we call crack spread, the difference between what it can sell its gasoline and diesel relative to its crude oil. So this is strategically, it's been a
And this
really
is
good
like
company.
you're
Yeah,
gaining that in your margin, right? Because you can sell it
right.
for the same price because the gasoline they sell, they're still selling it at market rates.
Exactly. And so you have that crude slate advantage that it has, so it tends to get higher gross margins. And so you combine that with efficient operations, it tends to have very high utilization rates, but that's been almost like industry standard for the past several years. Like the refining industry, like across the entire US has been fantastically better post 2000, basically since the crash in 2008 of the market. And so all in all, high utilization, good capitalization, and good strategy has been a great stock lately. The stock is down quite a bit over the past years, down like 33%. Ups and downs of the years just kind of happen. I think with a company that's trading for the price that it's at and the yield that you can get on this company, it's a pretty good deal.
Yeah, I've got it on the screen right now. You can see the purple line is Sinclair's stock price, and the orange line, this is West Texas crude. You can see there is a substantial amount of correlation over the past couple of years between the oil market price and the stock price. And that's typical of these sorts of companies. But the takeaway for me is that since it's kind of round tripped over the past 3 years, it's gotten back to a point where it's really, really appealing with that dividend yield. And again, because of the payout of its dividend, even though the stock price is round tripped, investors are still up about 14% in total returns over that kind of tough period, even when oil prices are down in total, because it's a good quality business with that dividend and it's a high yield now and they're growing it. So I think you're right. It's definitely the time to buy it. I'm gonna go in a slightly different direction. This is still an established, well-known brand out there, and a business that's gone under some hard times, but has some really interesting irons in the fire. And I think it's underappreciated, and the dividend yield and the over total valuation has gotten really appealing to me, and that's UPS. So I'm just going to put on the screen here. This is a look at its dividend yield over the past few years, moving from around 3% to over 5%. Of course, the bad news is that the stock price has gone down a lot, and that's the reason that's happened. But over that same period, it has been able to continue growing its dividend over the long term, right? And the dividend growth is going to start to slow, but again, that's typical of these sorts of businesses. But what makes UPS appealing to me? So number one, S is it's a strong, stable business, and we're going to continue to see long term demand for its services. And they've started moving away from some of the areas that are more competitive and the margins are slimmer, like just basic package delivery, and also moving into some more high growth areas. So they recently got one more screen, a couple of press releases I want to share on the screen before we wrap this up, Tyler. They recently completed some acquisitions moving into cold chain logistics for healthcare. So now, one thing I will say, this is a higher cost business. The operating costs to run this business is higher, but you get better margins. It's a value add part of the logistics industry. So they're by transitioning into this, they're positioning themselves as we see healthcare spend continue to grow, things like biologics that require a cold chain. That's biotech, right? The entire biotech industry is all biologics. It requires that cold chain. We're going to see a growth in that market. Here's one, Tyler. I think this might kind of perk you up a little bit. The recent acquisition of Estafeta, so moving and expanding its relationship with our neighbor south of the border, Mexico, which is one of the fastest growing, most dynamic economies in the world, and over the next decade is potentially going to create a tremendous amount of value for a lot of shareholders. Something else they've done in healthcare recently is open a facility, a testing facility near their primary hub in the Southeast, their air hub in the Southeast, to allow much faster turnaround for medical testing. And that's another thing that creates value for being able to turn tests around more quickly and more cheaply. So they're making some smart moves, I think, that are going to really strengthen the business over the long term, drive better profits, and allow it to be more focused on value add logistics versus just being the biggest shipping company in areas that have become more commoditized. So again, there you have it. We've got HF Sinclair and we've got UPS, two old names, two great businesses. Stocks kind of down a little bit recently. Great businesses. This is the time to add at what we think are appealing valuations. Own a high yield stock, grow your dividend over the long term, create value in your portfolio.